How do you completely pay off a $55 billion mega project 2 entire years ahead of schedule?
You run an oil company in 2026, apparently. Welcome to Earnings Unscripted. It's July 31st, 2026, and we're looking at ExxonMobil's massive second quarter, ticker XOM. So, Miro, last quarter was an absolute logistics nightmare, but this report's completely different.
Yeah, it's night and day. You're looking at top-line revenue of roughly $116 billion, which is a huge sequential bounce. And EPS came in at $3.48. That's more than double what they did this time last year.
Right, that's just a wild operational snapback. But honestly, watching the stock today, you'd think they announced a rounding error. It gapped down hard pre-market, looked awful at the open, and then basically just spent the entire session crawling back to close completely flat. And obviously, our read on the tape isn't actual financial advice, so please don't use our confusion over the market as your investment strategy.
It's muscle memory for the market right now. Traders saw that initial weakness and hesitated. Probably because they still have whiplash from Q1. You remember that massive accounting illusion we talked about last time?
Yeah, the naked hedge, where they booked those multi-billion-dollar paper losses because ships were delayed in the Middle East.
Exactly. Well, this quarter, reality caught up with the accounting. The energy products segment reversed that entire first quarter loss and posted a $5.4 billion profit. The physical deliveries finally normalized, and the timing effects unwound perfectly.
Oh, it's honestly crazy that they're casually shaking off Middle East supply chain chaos, especially considering they were dealing with major maintenance downtime simultaneously.
But they didn't just shake it off. They out-engineered it. They actually built this new centralized global operations unit. So instead of just eating the disruption costs, they rerouted fleets and tweaked product formulations on the fly using a new algorithmic logistics system. Management estimates they dodged hundreds of millions in disruption costs that completely flattened their smaller competitors.
Wow. So they're basically playing grand strategy with cargo ships in real time. And doing the same thing in the dirt, apparently. Did you see the note about how they're drilling in the Permian now?
You mean steering 4-mile-long wells with a joystick?
Yeah, that's wild. They're sitting in a remote control center in Houston using predictive AI to drill 80 precision wells over 100 miles away from the actual dirt.
That's the kind of futuristic scale that breaks my brain a little bit. It's not just pumping oil anymore. It's a massive tech operation. But if everything's running so beautifully and the tech's bailing them out, I really need to know why Darren Woods sounds so furious at the European government.
Because he basically declared war on their tax policy. Europe keeps aggressively pushing these windfall profit taxes on refineries, and Woods just had enough.
Wait, but are they suing, like actually taking regulators to court?
Yep, they're suing the EU, and they've canceled discretionary investments across Europe because of it. I'll just read you Woods' exact quote from the call. Penalizing the businesses who've stood by those countries and provided that product going forward is very short-sighted. We're suing the EU because we don't think that's a legal taking.
Wow. That's honestly refreshing to hear management just say the quiet part out loud. Usually it's all corporate polite speak. But if they're ripping that investment out of Europe, they've got to be funneling it somewhere else, right?
Exactly. And that's the real story hiding in this report. Guyana. They just hit this huge milestone there 2 entire years early, which they call desaturation.
Okay, hold on. Desaturation? That sounds like a photography filter. What does that actually mean for the business?
Yeah, fair. So it's an accounting mechanism inside their production sharing contract. When you build offshore infrastructure like this, there's a massive initial cost bank you get to recover first before splitting the real profits. For Guyana, that was a $55 billion cap.
Right, the initial build cost.
Exactly. And desaturation is the exact moment you finish recovering all that capital. Because operations ran so flawlessly, they essentially burned through the debt phase way ahead of schedule. So everything after this point flips from just paying off the build to generating pure corporate cash flow.
Oh, got it. So the infrastructure is basically paid off, and now the spigot just
opens completely.
It blasts open. The CFO was pretty direct about it, too. He said, going forward, we're going to see 2 times the level of free cash flow in 2030 than we saw in 2025.
Double the free cash flow from a project that massive? That's insane. And they're already generating a ton of cash right now.
Yeah, free cash flow hit $17.2 billion this quarter, up from roughly $2.7 in Q1, which was obviously weighed down by all that derivative noise we mentioned. So even though the actual physical barrel volumes they get to keep in Guyana dips slightly under the new terms, the pure cash margin on those remaining barrels inflects heavily.
So the financial value completely overtakes the volume.
Precisely.
That's an amazing position to be in. But they still have massive capital expenditures going out the door across the rest of the business.
Right. The total cash capex target is still locked between $27 and $29 billion for the year, which for context means they're spending roughly 20% more than their closest peer. They're not exactly penny pinching.
No kidding. But if you've got this cash cannon coming online in South America and you're actively pulling money out of Europe, how do they decide where to deploy all that excess capital efficiently without overextending themselves?
Well, they offset that aggressive spending we just mentioned by ruthlessly gutting their baseline operating expenses. Management's aiming to hit $20 billion in cumulative structural savings by the end of this decade. So they're basically funding all this new growth by shrinking the legacy corporate footprint.
Right, which connects perfectly to that new global operations unit you brought up earlier. Doing way more with the exact same workforce. But wait, if they're running everything that tight, what's the actual risk going forward? Like, what breaks first?
It's the geopolitical exposure, specifically the LNG portfolio. They have roughly 2/3 of those operations tied up in Qatar right now. And if you read between the lines on the earnings call, analysts were getting really jittery about that concentration risk.
I mean, it's a completely valid fear, right?
Yeah.
You can have the most advanced predictive AI in Texas, but if those Middle Eastern shipping lanes freeze up again, your product just isn't moving.
Exactly. And Darren Woods actually validated that concern. He flat out said, I think there's going to be a continued inhibition for movement, which will, even once we get things cleared up, I think it'll take some time for folks to gain some confidence there. So they know they're geographically vulnerable.
So their solution is just, what, casually spinning up alternative multi-billion-dollar projects in different hemispheres?
Pretty much. That's why they're heavily evaluating final investment decisions in Papua New Guinea and Mozambique later this year. It feels like they're just daring the global cycle to try and break their balance sheet.
Honestly, after seeing them survive the chaos of last quarter and come out this far ahead, I kind of get why they feel bulletproof. It's really just this flawlessly run giant trying to out-engineer global gravity. But I think that's all we've got time for today. Always fun unpacking these with you, Miro.
Always a pleasure. Catch you later.
If you liked the chat today, hit follow so you don't miss our next breakdown. And for full transparency, this whole show is actually an AI experiment. The script and our voices are completely synthetic, and that's how we turned today's Exxon earnings call into a podcast the exact same afternoon. We'd love to know what company you want us to tackle next, so send those ticker ideas over to earningsunscripted@datamadness.ca or find the X link in the show notes.
See you next time.